for more on currencies is Stephen Dooley, Head of Research for currency broker Forex CT, and David Green, Senior Dealer at Western Union Business Solutions. And of course our guest host today is Greg Canavan, Editor of Sound Money, Sound Investments. And gentlemen, appreciate your time today. I just want to start, I suppose, by focusing, we did talk briefly about the impact of Operation Twist and this Chinese PMI data. Stephen, let's just start with you. Why did we see the Aussie dive so low today?
Well, thanks, Maura. You've already mentioned two of the big reasons, of course. There was an expectation that while the vast majority of the market was focused on Operation Twist, there was still a slight hope that we might hear some commentary about a QE3 or some kind of stimulatory program along those lines. And some of that was baked into the market. So hopes of that were certainly dashed by hearing that at least three members of the FOMC are still very reluctant to engage in stimulus programs. So that was part of the reason. Again, as you said, the Chinese PMI data today. But we also had some commentary out of the RBA this morning as well, saying that they're able to reverse path pretty quickly when it comes to interest rates if the need be. So there's three pretty big reasons straight up for the Aussie dollar to be sent lower, and as a result we've seen about a 300 pip move to the downside over the last 24 hours.
David, I mean, how much impact is domestic data and I suppose this Chinese data having on the Aussie right now? Is it having any significant impact, or is this weakness more about the current banking crisis?
Yeah, look, I certainly think definitely the markets, there's really a flight to safety overnight with the move by the Fed. So coming into this morning, definitely pressure was on the downside, and we saw a huge amount of flows into the US dollar. And the Aussie really copped it on the back of that. It wasn't helped by the Chinese PMI data that was released around midday or 12:30. And that showed, I suppose, somewhat of a contraction in industrial production in China. It is, albeit a preliminary measure, the main measure is due out next week, but it doesn't really bode well for the Chinese economy. So both of those announcements really impacted the Aussie today, certainly.
Greg, we heard Michael McCarthy from CMC Market Stockbroking just mentioned before that the HSBC flash PMI data has been in past months coming in a little bit worse off than the actual read from the Chinese official data. Many suggest that a lot of this Chinese data should really be taken with a grain of salt, in the sense that it's not all that accurate. Disclosure and transparency factors over there, impacting often what is a big read that impacts our local market and equities as well. Of
course, and look, it's just one data point amongst many. I mean, who remembers what the data was last month, 2 months ago? This affects the market for maybe 1 or 2 days. It does stay in the memory for a little while, but the bottom line is, the trend is that manufacturing in China is slowing down, and that shouldn't surprise anyone given that the interest rate rises they've had over there over the past 6 months. And it's not the end of the world, it's slowing down, big deal.
Yeah, given this, Stephen, the Aussie dollar in the near term, are we going to see these levels stick around for a while, do you think?
Well, yeah, from a technical perspective, everyone in the market's looking at the 99.30 level pretty carefully. We've rolled over with a new lower high at 107. If we break below 99.30, then all the technicians will certainly be slightly more bearish, or a lot more bearish. On the Aussie dollar, from a fundamental perspective, it's really going to be driven by the commentary that's coming out of the RBA. At the moment, the Aussie dollar's got a great interest rate differential advantage over the US dollar, and we're going to be watching the commentary from the RBA. If they continue to say that it's a line ball call on raising interest rates, if they even start considering cutting interest rates, then you're likely to see the Aussie dollar weaken. But we believe that's really only for that period that the RBA so clearly articulates that it's looking to wind back on rates, or certainly while the market, as in the bond market, signals that a rate cut is looming. We think that even if there is a need for them to cut rates, say maybe over the next 3, 6, 9 months, eventually there'll be a point where they need to stop, and that's when you'll see the Aussie dollar starting to push significantly higher again.
Yeah, David Green, your take on this 99.30 level? Are we going to see weakness and a possible breakthrough that support level, do you think, in the short to medium term?
Look, I suppose short term, maybe 24, 48 hours. I wouldn't be surprised to see the market test that previous low. But look, the Aussie is certainly a very resilient currency, and as mentioned previously, we've got strong economic fundamentals. certainly the interest rate differential that we do enjoy between ourselves and the US really holds us in good stead. One thing we might see an intervention play from, say, the Bank of Japan and other sort of Asian central banks. They certainly saw the Aussie as a good buy opportunity at the previous low, at that 99.30 mark. So whether that intervention comes into play, we may see the Aussie yet bounce. We certainly, over the short term, would see pressure on the downside. However, resilience on the Aussie, we would hope to see that bounce somewhat.
And David, some FX strategists today suggesting the Aussie-US will get a lift, in fact, from Foster's agreeing to be taken over by SAB Miller. They say they don't expect it to happen in the short run, but believe the flow of Aussie will actually be enough to provide genuine support for the currency. Your thoughts on that?
Look, it certainly flows in and out of the country do help support, but I suppose viewers may want to be reminded that a large proportion of the FX market is based on